Hello traders, and welcome to the weekend update here for November 5th. I'll tell you up front, this is going to be my worst weekend update I've had since I started the service. We had some things that did not go well. I'll get into those in a few minutes. So these are the current positions. Our Google wheel strategy, while Google sold off hard, it has since rebound and is back, into some decent profit. This particular option doesn't expire for another couple weeks. I may very well roll it. If I leave it here, I will likely get assigned in a week or so, and I don't know, I'm fine rolling it out again. So that's probably what I'll do on this one. This particular trade, our market has been all over everywhere since this trade opened up. I'll get into the market conditions in a minute. We'll take a look at a chart. This one was opened recently and then added to the next day. I like this. It's got a nice, reasonably wide tent to it. This trade also has gone through massive whipsaws up and down, but we got a pretty good entry on that trade back when I entered it. I don't even know how many days. I guess about 11 days or so ago. That trade is looking pretty good. That was entered in the market sell-off when volatility was high. I added the call spread to the upper end of this here recently because I have an opinion that I don't think our market's likely to go above this 4,400 mark. That's another 50 points higher than what we've already run, and we've run a massive amount, as we're going to see here shortly. I had the Starbucks earnings trade that's not doing well right now, but our short option doesn't expire until this coming Friday. The long option expires a week after that. So there's some different things that we can do with this. I'm going to look at that probably midweek or so. eBay has earnings coming up. Don't really know where this is likely to end up, but it was a very, very good reward to risk ratio, which is what made me want to get into this position. So that's kind of what's going on right now with the current positions that are open. Now, here's the sad part, and that is the equity curve. So I started the service on December 1st, 2022. We're not quite, we're 11 months in. And I have logged every trade. It's automatically reported here in OTA. And of course, everybody can see those results. If you're a member of the service, you can go and play back all these historical trades. You can see all the videos of when I entered them, when I adjusted them, when I closed them, etc. So playing with a totally open hand here. That said, this last week there were two specific trades that hit my equity curve very, very hard. I made a new high last week, but I also mentioned last week that I've got a couple of trades that are going to be closing here soon that are probably gonna hurt. I should say that this represents about a $2,800 loss or $2,800 pullback. And again, that was largely a result of the huge, massive upmarket and downmarket swings. However, I would say that my losses are much, much worse than most traders would be in this situation. And the reason is that I attempted to seesaw out of a calendar trade. When I went and seesawed my way out of that trade, essentially day traded my way out of that trade, what should have been about a $600, maybe $700 loss ended up being almost a $2,000 loss. That was on me. I was trying to show something. I was trying to illustrate how a person might consider going back and forth, selling a short, buying back a short, selling a long, buying back a short, selling a long, and seesawing out of a position. And I got caught in a market move while I was doing that. All of a sudden, the market started ripping off in one direction on me. And since I'm trading SPX, that represents some size. And I panicked and covered and got out of my one-sided position, having to essentially, pay up or take a more sizable loss than I would have if I just sold the thing as a calendar. So at the end of the day, I will say that about 1,100 of this is me experimenting, but I also had a similar situation back here where I was lagging out of one, and I actually did a little better than had I just bought back the calendar. I day traded my way out of it, and it generated about a $900 profit above and beyond what just exiting the calendar would have done. And I said at the time that I was lucky, this worked in my favor. There will be a time in the future where this will work against me. I logged this when it worked in my favor. I logged this when it worked against me, and I'm noting that. So at the end of the day, out of this $2,900 in loss, about $1,300 of it is just legitimate. Trades went against us. Nothing I could do about it. I shouldn't say nothing I could do about it. Obviously, if I had the benefit of hindsight, I maybe could have done some things about it. And I've done reviews. Those of you that are members of the alert service, you can go into these trades in the archives. And I've done videos on both of these where I walked back through them and I give some thoughts or ideas as to whether or not I could have learned something from them. Could they have been played a little differently maybe than I did? So anyhow, those are, for those of you that are part of the service, go to the archive trades in the lower left-hand corner, and you can look at both those trades. There's Loom videos attached that do a complete walkthrough. Everything that I do is around learning and helping people learn the good stuff and learn the bad stuff. Learn it from my mistakes so that hopefully then you won't repeat it. So anyhow, the bottom line is this was a big ding. It's going to take a while to recover from this. I'm not going to kid anybody. All that said, even down here at about $13,750, if you consider that our average trade contains about $2,500 in risk, and I will usually have 3 to 5 trades open at a time. If I have 5 trades open at $2,500 risk, that represents about $12,500 in working capital. So with that $12,500 in working capital and being up $13,750 year to date, that still is over a 100% return on that capital. So, still good return in general, nice equity curve, but sizable hit here. So got that out of the way. Just wanted to make sure we covered all that. Now let's take a look at what our market did and what it might do here going forward. So since that trade had been opened, by the way, that trade was opened all the way back in here, and then we went through this massive sell-off. That trade got adjusted multiple times for down move, and then our market ripped back up on us, and this is an SPX, so we went from somewhere up in here, 4,400 down to 4,200, back to 4,400, down to 4,100, and then back up here to about 4,400. So trade went through a lot of gyrations, both of those two trades. One of them was in SPY, and of course SPY mirrored this, and I get into that again in that explanation, the Loom video that I put into the archives there. So what are we looking at now? Well, we had some very good economic news last week, which is what prompted this. Fed came out, and from my perspective, the Fed didn't really say much that I would consider to be positive, but what I think really doesn't matter. The market liked it, and we started taking off. So, and then we had a massive gap up. We gapped right into what I would have considered to be potential resistance, blew right on through that. And then on Friday, we gapped up again, ran up even more. Now, we ran up almost to this 4,400 area again, which I consider to be some resistance. I've been wrong, as you can see, multiple times. I did have this pegged as some support area, support area, support area. Support area broke. Came back, became resistance. Came down. I was expecting it came right up there to that resistance. I was expecting that resistance to hold. Next day, blew right through it. Then when we pulled back, I was expecting support there. It supported for a day. Then 3 days later, came back down, dropped through, and just plummeted from there, okay? So at this point, I'm expecting that right in here was probably going to be some resistance when the market came back up. Well, it kind of went right through that. Now, it did stop right here around the 200-day moving average. But again, the next day, this gap up, gap and run, just very, very difficult moves to try to accommodate. Now, in the down moves, what we have going in our favor is you can see this blue line, volatility spiked up massively. When volatility spikes up, that gives us an opportunity to adjust those positions and to get some juice or get some extra premium when we adjust them. When the market is ripping up, volatility is dropping. So at that point, not only do we have the market moving hard against us, but we also have the volatility in the options dropping out considerably. And that makes it very difficult to get any decent money or decent juice in potential adjustments at that point. So, that is kind of if there's one thing you don't want with delta neutral trading, it's going to be a rapidly up-moving market, because you have on a butterfly or a condor or something that has a fairly wide tent and a fairly flat T0 line, but when you start ripping up, it's very difficult to chase that trade and to adjust and to get any sort of real premium as you're making those adjustments. So then, much like that trade was adjusted here, problem is when you adjust for this up move, you now have a trade that has more downside exposure than you might normally want to have, and it's because you've adjusted that trade with the anticipation of continued upside, and then of course you get a plummet like this. And so then you adjust for a worst case scenario down here and wham, right back at you. So what are we expecting here? Well, I kind of look at this and I say that, we've got essentially a downtrend here. I mean, we're making lower highs and we're making lower lows. Let me see if I can put on my drawing tool here. So we're kind of, looking at something along these lines. So again, making lower highs, and again, lower lows. Now, had we broken this, had we blown up into here somewhere and held up there going into the close, I could maybe say that we're looking at a reversal. That would be the first part of a reversal, would be making a new higher high, but we didn't do that. And we did make a new lower low. So in order for the reversal to be in place, I want to see, not only I want to see us make a higher high up here, but then when that pullback happens, I need the pullback to also be higher than this low. So I need a higher high and I need a higher low to be put in place over the next couple of weeks in order for me to consider that we've made a trend reversal. Short of that, I am still of the opinion that we are in what's a resistance area and that we are likely to see some movement back down. Now, how fast, how violent that move's going to be, I don't know. Your guess is as good as mine at this point. But that's kind of what I'm envisioning right now, is that we might get a move back. And generally speaking, when you have a move this aggressive or this violent, whether it's an up move or a down move, a lot of times that move will tend to retrace about 50%. So based on that, I might expect to fall off this call it 4,400 range, maybe back down into this 4,250 range, somewhere down in there. Or maybe even it just pulls back and this old uptrend line comes back into play. Maybe the market starts adhering to that uptrend line again. I was kind of surprised that it broke through it with such fervor here, but it did. So that's kind of where my head is at, and what my expectations might be in the next week or so is that maybe a little chop sideways, maybe a little bit of a pullback. If we do get a pullback, I think 4,250 is very realistic. It wouldn't be out of the question to come down and make a new lower low either, just to be clear. But right now, I'm just kind of banking on a pullback here into this 4,250 range. Keep in mind also, we are going into the last 2 months of the year. In many years, we do have what they call the Santa Claus rally. Obviously not a guaranteed thing, particularly with all the political things that are going on in the world today. But that is something to be aware of. While there's a little more tendency for sell-offs in October, which we experienced, there's also a little more tendency historically in our market to have rallies going into the close of the year. So was this our rally that occurred early and it's done? Don't know. But that's kind of my general thoughts on the markets going forward and the current trades we have open. I'm a little reluctant to open something new just yet. I'd like to see a little bit of pullback and a little bit of an increase in volatility. I'd like to get these two earnings bonuses off the plate as well. So those are a few things I'd like to have happen, and then maybe mid to late this week, if we get a little bit of a sell-off, I would look to open something new. Also, if we do get that pullback a little bit, I think this trade will start to heal itself fairly quickly. I think theta decay will kick in fairly quickly on this if we start to get a little market pullback. And if we do get a pullback into this area, I will also start looking at rolling in wings, taking some of the risk out of this trade as well. And we'll likely end up doing the same thing here on this one over the next couple of weeks as well. If our market just chops back and forth in here and we get decay, our T0 rises up into this trade, I'm just going to start rolling these wings up, just taking a little risk out of those trade, and then just let it continue to decay. Of course, the same thing here, but we're further out here. We're out in a 12.15 here. So, I can let this one go a little bit further. So that's it for our weekend update here on November 5th, the ugliest weekend update of the year. But that happens in trading. One final comment I will make. I often get traders that talk to me about, I want to start trading full time. Not that can't be done, but these sorts of things do happen. I'll tell you, for me personally, I've pulled nice paychecks out of my trading account most of the months of this year. And I also, in not just these trades, but in my own personal trades, I took significant hits this month, to the point where it's going to take me probably 2 to 3 months of no paycheck before I start getting a paycheck again out of my account. And so when somebody talks to me about, I want to trade full time for a living, one of the things I always stress to them is that this isn't like a job where if you do move A and move B, that you're going to generate X amount of income per month. You need to, when you have those good months, you need to sock that money away, have that powder dry, Don't go out and spend the money that you had made in a given month. Make sure that you're stockpiling some of that so that you have a buffer. So I've been doing that throughout the year. I have a buffer. That buffer sits there. I draw on that buffer now for 2-3 months as needed. It hopefully won't be that long, but it's not out of the question that it'll take 2 months before I hit a new high in the equity curve, in my personal equity curve. And it's not out of the question that it could take a month or two to hit a new high in the equity curve here for the alert service as well. So I just wanted to take this opportunity to share that. And I can also go back and look at my trades and say, I don't think I did anything horribly wrong in my trades. There's a couple things I maybe could have done a little bit better. But when you have, again, massive market swings like this, it's as violent down as this was and as violently up as this was, and you're trading delta neutral income strategies, that is just an extremely difficult environment, and you have to expect losses at some level during those type of market moves. So with that, I will wrap up the weekend update here on November 5th, 2023.